There we have it. The Kenyan stocks rising to a near 32-month high, breaking through its upside resistance, which was pegged at 3,640 points. And from local participation, we're seeing, Aly-Khan, it really seems like the gains are becoming increasingly hard to ignore at this stage.
Absolutely. I mean, we really accelerated last week. We are up 23.11% year to date. I think we might well be the best performing stock market in the world. We're admittedly coming off a low base, emerging out of a fat tail, but really it has got tremendous momentum and it remains an undervalued stock exchange as well.
Yet we see this divergence in terms of interest at the moment. I mean, local institutional investors are weighing in, but foreign investor participation, from a report that I was reading out of Securities Africa this morning, saying that we're seeing that participation diminish somewhat. So why that discrepancy between the locals and foreigners at this stage?
Well, I think definitely the bottom of the market was bought by foreign investors. Local institutions were sidelined and took refuge in the bond market and really missed a great deal of this rally from the lows. We're now seeing foreign and institutional investors continue to maintain or just lower their participation levels. But local institutions need to get into the stock exchange because on an absolute return basis, if they're overweight bonds, they're going to fall far, far behind benchmark returns this year, which are going to be stellar in the equity market. So we have this divergence, but I think we're seeing local institutions now reaching a tipping point and having to come in. Retail investors still a little bit behind, but on their way back as well.
Well, we can use two stocks as case in points here. I mean, looking at the capital gains from Kenya Airways, we saw 173% over the past 12 months. I mean, you've really been optimistic about this counter, especially with fuel hedges rolling off this year. Your outlook for the company, and is now the time to be jumping in after we've seen this share price already surging quite rapidly?
Well, Kenya Airways is a really high beta, very leveraged operational structure, and we're in a very high beta turnaround. We're going from when it was really ugly into a time when it might look very beautiful. So that swing, I think, the momentum takes us up to, on a price level, probably to 72 and then 77. We're coming off a very low base on Kenya Airways, so I still see room for upside on this stock because of the incredible turnaround you get with the effect of fuel on this balance sheet.
Well, that's the one counter. The other one is Safaricom as well. I mean, recording 101% gains over the same period as well. Upside potential on that counter?
Well, I think here we're looking at 570 and then 610 and maybe a little bit higher ahead of the full year results. It was, with Kenya Airways, the leader of the NSE. It's taken a small breather here, but the demand-supply mismatch is in complete disequilibrium. There's demand last on Friday for 11 million shares. There were 3 million shares available. You could get a sharp supply-related squeeze on this price as well. I'm looking for 610. I think people don't truly understand the extraordinary impact of the mobile wallet and M-Pesa or the internet, which is on a really super growth curve. And those two are the areas where I think investors are going to see the penny drop around the full year results.
Well, what has been providing a lot of the impetus, Aly-Khan, has been the earnings season. I mean, overall, they've been pretty positive, but now with earnings season drawing to a close, some are suggesting that the markets are now set for a correction. Are you seeing signs of the fact that investors may well be starting to sell on the strength?
I think that's a valid point to use, and we do get these bouts of profit taking. You know, when you rise 300-400 points in the space of 10 days, you are going to find profit takers come in and look to bag some of their gains. But I think we're coming off such a low base. The market's demand equation, the demand side of the equation is so powerful that I actually think we're going to push on from here as well. I'm looking for levels on the NSE 20 of about 5,000, which were the levels prevailing immediately after our election in 2008, when our political risk was blinking red. So I'm looking forward for another 1,000 points on the index.
Well, certainly for now, we've still got a couple of results still keeping things ticking. After the bell on Friday, we saw Athi Mining eventually release their numbers, releasing a report of 34% increase in annual pre-tax profit. What have you made of those numbers? Because we know that sentiment around this stock, particularly in that cement space, has been overall pretty optimistic.
Yes, I'm very optimistic about Athi River mining. I think Pradeep is an execution-in-chief type of leader of that organization. They do not make mistakes. There is a low base effect. He's always juicing the equity. I think you've got to look at 100 as being key chart support. It's about 105 now, and you can probably see it going up to 120, 125. But ARM is not a share for the flippers. I think it's a share to hold for 3 to 5 years, because that's when he's really compounding the EPS. He's gone on a big growth surge in cement, and it all feeds down dynamically over the next 5 years. This is not a share to play in the short term. I think you've got to look at it with a 3 to 5 year outlook.
Of course, we did see, in recent news, well, relatively recently, that there was this divestiture from Bamburi, reducing its stake in the company as well. What kind of leverage do you see this affording the company moving forward, especially in a context where you've got East African breweries and Bamburi Cement aggressively competing for a similar market?
Well, I think you've got a lot more competition coming in play, but Athi River is scaling up, not in Kenya but in Tanzania, where there is a lot of juice in the cement margins. I think he remains ahead of the curve. I think he is an extremely able fellow at executing on budget, and I think it's a share that in the cement sector I would like to keep because of its high beta price on the share price. I think it's got a lot of potential in capital gains on this.